The fate of the housing market depends on the rate of inflation these days, and the news in this week's report didn't point towards brighter things ahead. The latest data showed inflation accelerating and reaching a new multi-decade record. In today's video, we're going to look at what's driving the latest numbers and what that means for the Federal Reserve's monetary policy response, mortgage rates, and ultimately home prices in 2022. Let's get into it. The Bureau of Labor Statistics released their latest Consumer Price Index report this week, and it showed the rate of inflation has come in above the recent peak in March and prompted new concerns that the Fed is going to have to get serious about hiking interest rates and carries the risk of crashing the housing market. Let's take a look at the latest data and see what's moving these numbers. The latest CPI data showed consumer inflation coming in at an 8.6% annual rate in May, higher than the previous peak in March, and shows inflation has yet to peak and slow down. This new multi-decade record high was the most it's been since December 1981. Some of the most critical spending categories in everyday life, food, gasoline, and shelter, were what drove the bulk of the price increases. The price index for food, which includes both groceries and going out to eat, increased by 10% over the same time last year, which was the highest rate of growth for this category since December 1980. Gasoline prices increased by 48% year over year, and while this may be down from the recent peak of 57% back in November 2021, these recent annual growth rates in gasoline prices haven't been seen since December of 2009. And the price index for shelter, which makes up almost a third of the CPI, increased by 5.4%, which was the highest year-over-year growth rate since February 1991. With headline CPI inflation as well as consumer-sensitive spending categories making multi-decade record highs, it should not come as much of a surprise that markets sold off in response, posting some of the worst performance in months. And the general public is becoming increasingly worried that this inflation is here to stay and appears to have led some consumers to feel that we are already in the middle of a recession, even if the economic data has yet to show that. So the latest data is showing we still haven't reached peak inflation. This is precisely the kind of inflation report the Federal Reserve does not want to see. So far, they haven't had to raise their Fed funds rate by much to get a response from the stock market. And if they continue to see accelerating inflation like in the report this week, they will have to move beyond their 50 basis point increase to rein in this inflation beast. That will in turn put further upward pressure on mortgage rates, making homes increasingly unaffordable at current prices. And a downturn in the housing market seems practically unavoidable at this point. Next week, the Fed will meet on June 14th and 15th with Fed Chairman Powell holding his press conference on the 15th. We'll hear their decision on interest rates as well as comments on the path of future rate hikes. I'll release a video on what happens in the Fed's policy meeting next week, and towards the end of the month, I'll be releasing an update to my housing market crash scenarios with all the latest data. If you want to see those videos as they come out, make sure you're subscribed to this channel and hit that notification bell down below so you know right away when those videos are released. And if you found this video useful, please give it a thumbs up to support the channel and help it grow. It is much appreciated. Thanks for stopping by, and I'll see you in the next video.